Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning pre-market webcast. Okay, I started us off on the hourly chart this morning because that's basically what the deal is here. They pushed it down yesterday. They bought the dip. Didn't really challenge the weekly pivot. They did kind of a sad little test of the weekly pivot, kind of like they did last Monday. Here's your sad little test of the weekly pivot. You can see it didn't even really approach it. And we've got this sad little test of the weekly pivot, and it didn't really approach it either. So how did we react to that? We got long in the 52s. And we've taken profits, and I still have a runner. I don't know if it's going to survive the open or not. But the character of this market has been to pop off the open, then drop, then grind the rest of the day. Pop, drop, and grind. That was a term coined by an old mentor of mine, and it's never been more true than in the last 2-3 weeks of this market. The bulls remain in control. They'll stay in control as long as they hold key areas like the 9-day simple moving average, which is up at 50 today, the weekly pivot at 49. They ideally they don't want to be taking out yesterday's low down in the 50-75 area. So I'll be very interested to see what happens off the open, to see if they can break daily pivot there in the 54-67 area, and if they can convert that. They tried it a few times overnight, you can see here, but they weren't able to get it done. They are literally testing it as we speak. So you hop out on the daily chart and you see, we talked last week about how we were going to get a test of the 9-day simple moving average as a function of time, not as a function of price. You can see price continues to head higher, but you can see the blue line coming up to meet price. It has not traded on the other side of it. It has not fought over it like it did back here. It simply glided in, come back up, made a new higher high. So what do the bulls want to do? They want to stay above the blue line. They want to make a new higher high, and they want to start to reach for higher prices. You can call this extended. You can call it stretched. It's really not. Until the bears really break this dynamic, this market is asleep. It is absolutely asleep, and it is asleep on like on an escalator that is slowly going up. And the bears are going to have to break that dynamic. If there's a shoe out there, it'll drop when it's ready to drop and not before. So until it's ready to drop, you need to respect the market dynamic. And the market dynamic is this slow glide higher. I'll show you the same chart I showed you yesterday, the weekly. Okay? Why are things so brutally painful right now if you're a short? Because you're on a weekly pivot upper band ride, okay? If you are a short, even if you're a long-term, super patient, fill in the blank for whatever you think you are type of short, I mean, this is the 7th level of hell for you. 1 week, 2 weeks, 3, 4, 5, 6 week band ride at the upper level. I mean, it does not get more slow, grinding, painful upside than that. So if it feels that way, that's why. All right, everybody have a fantastic day. I will catch everybody for the midday update. Talk to you then. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.